If you want to become a successful trader, you'll have to avoid making many common mistakes that traders often make. As you learn to trade, you will make mistakes, but the traders who actually start making money are the ones who learn from those mistakes and stop repeating them. The objective of this lesson is to give you some simple solutions to the most common mistakes traders make. Then you need to learn from them and make sure to avoid them in the future as you analyze and trade the markets. Now let's look at these common mistakes that every inexperienced trader makes and learn how to avoid them. Traders lose money when they trade in too many trades at once, which results in overtrading. This is perhaps the biggest mistake which all the new traders make. Furthermore, it is not surprising that 90% of traders lose money over the long run when they trade over trade. And if you find yourself participating in more than one market at a time, it's a good bet that you're trying to do too much. The general rule is that there is no logical reason to be in more than one market at a time. Many people can't help but avoid trading constantly, so they come up with all sorts of reasons why they should trade or invent trading signals that don't really exist. Unless you can control yourself and stop overtrading, you will never be able to consistently make money trading the markets. Perhaps the easiest way to train yourself to stop overtrading is to consider this business as a long-term project. Start to consider what making money trading actually consists of, and remember that less is more, and that the more you trade, the more likely you are to lose. The second mistake which traders make is spending too much time thinking about trading and looking at charts. Overthinking is simply thinking about trading too much. Many traders often make the mistake of flipping through charts over and over, even when there are no obvious price action signals to trade. As a result, they get into trades they usually wouldn't do because they aren't following their trading plan. If you find yourself reflecting on trading or your trades at most of the times, it is safe to say you are overtrading and it's been causing you to lose money. You must have allotted periods of time when you are not using the charts in your trading plan. You should go about following your trading plan, and you will find that those periods where you are not using the charts are merely a natural and inevitable part of the process. If you end up failing because you wander from the game plan, you have only yourself to blame. Therefore, success depends on your ability to remain disciplined and stay on the predetermined plan, which is why most people fail when trading Forex. They are unable to maintain the focus and dedication they have over a long period of time, consistently. The third common mistake error which traders make is trying to make trading decisions from short time frame charts. One of the mistakes newer traders make is day trading. Many new traders first hear about day trading before they have time to learn anything else about it. From the very beginning of their time in the markets, they follow a wayward path, trading on time frames like 5 minutes or 1 minute charts, which leads to extreme overtrading and gambling, not to mention trading addiction. A lower time frame chart is simply not as valuable as its counterpart in a higher time frame chart. The reason is simple: a higher time frame chart reflects more data and carries more weight than a short time frame chart. A daily chart bar is far more important than a 1 minute chart bar. You need more patience to trade higher time frames, but in exchange you get more reliable signals and face less stress. You can set up a trade and walk away from it for 24 hours or longer when you trade daily charts. This is how you trade like a nomad and enjoy the lifestyle that trading can provide. Trading with real money before you have tested yourself on a demo account. This mistake kills your money, yet we see beginning traders make it all the time. You trade with real money before you even test your strategy on a demo account. In most cases it is because traders are not familiar with the account and how it works, so they end up making silly mistakes like risking more than they should or not entering a stop loss properly. Obviously, they lose money by doing this. Since you have not tested your trading strategy on a demo account, in live market conditions, you don't even know if it will be effective. How someone would take their hard-earned money and just put it in the market with no practice on demo account is beyond imagination. The role of someone who wishes to become a skilled and profitable trader is to test their strategy, as well as their ability to trade it, on a demo trading platform. Doing so can prevent financial loss. Getting sucked into the black hole of news distractions. News distractions is a real thing in the trading world, and if you're not careful you will fall into it and never get out until all your money is gone. Traders are often looking for reasons as to why their trades should succeed. And we all know that anything you can find on the internet has many opinions, for or against any argument. It often happens that traders research economic and trading news on the internet and think they have figured out what will happen based on economic news releases. After that, they place a trade based on their opinion, which is very dangerous. It's dangerous because very often the trading news or the economic news are already priced into the market. In other words, it's already reflected in the price action and the financial institutions have already acted upon what they believe will take place before the economic news is released. Following the release of the news, a whipsaw will take place in the market, where the price spikes one way but whipsaws back the other direction. This is obviously nearly impossible to trade and causes most uneducated traders to lose money. You shouldn't trade solely on news because of this. Since all news and all factors that affect a market already appear on a chart when trading raw price action, all confusion around trading the news is removed. If you can read and trade the price action, you will also be able to read and trade the news without actually analyzing or reading the news. Not understanding that every trade has a random expectation. The biggest mistake most traders make about trading is that they simply do not understand that every trade they make has an equal chance of ending up in a loss or a gain. However, that does not mean you can't develop a high percentage winning strategy, because you can. However, trading involves random outcomes of wins and losses, so in a sample size of trades, the sequence of wins and losses will never be known. As long as your strategy wins 60% of the time, you can expect to be making money in the market. With trading, you might get 10 losses in a row within a 100 sample size of trades, but after those 100 trades you can still win 60% of the time. If you stray from your trading plan during that inevitable streak of losses, you'll quickly break out of it and then start making terrible trades in an attempt to make back the money you lost. And because the downward trajectory will persist, your account will eventually end up broke. You do not know whether or not your edge and ability to trade are actually profitable with any one trade. It is the end result of many trades that will allow you to evaluate whether or not you have a sustainable edge. To see what your edge looks like, you also need to manage your risk to a level where a large enough sample size can be reached. 7th reason why traders lose is feeling a sense of desperation or urgency to trade. Trading and being in trades is one of the biggest thinking errors that many traders make. It is a huge mistake because trading is inherently risky, and it is inherently difficult because so many people don't have the mental strength or aren't willing to develop it. To sum up, you must realize and accept that trading cannot be your plan A, so to speak. And, even if you get really good at trading and start making consistent profits month after month, you should still maintain a side job or side hustle and not put all your money at risk in the markets. If you can set up a long-term investing strategy or contribute to funds, it would not be as difficult for you to make your profits. But even then, please don't rely solely on your investment, there's too much pressure on you then. One sure way to never succeed at trading is by placing too much pressure on yourself to make money. Successful trading happens when you are calm, collected, and do not care if your trades win or lose. That might sound strange. As soon as you dedicate a significant amount of emotional and mental energy to any one trade or to trading in general, you will lose all the time and not gain any benefits. 8th reason which causes traders lose is due to not trusting decisions and sticking to them. If you enter a trade, it is important to not bail at the first sign of trouble, but instead stay the course until you've profited on the same time frame as when you initiated the trade. Don't change your initial trade plan unless there is a significant price movement against your trade decision. Traders will spend time analyzing the market, looking for a trade signal, setting it up, placing it, and then be frustrated when the market starts moving against them and their open trade profit becomes a loss. But this is normal. You will inevitably have trades that are unsuccessful, and there will be losses from time to time, but if you get very emotional about every unfavorable trade, you will lose all your funds quickly. All this goes back to the point about the random outcome of any one trade, as discussed above. You cannot rely on one trade to tell you what the market is thinking, as that doesn't accurately portray the larger story told through all the trade outcomes. As a result, you shouldn't put your heart and soul into every trade, you should let the market do its thinking and then you can trade more stress-free and profitably. 9th reason which results in losing is focusing too much on the money and reward and not enough on the process. Remember to get out of your own way and let the process take over. Traders spend too much time focusing on money and rewards and too little time on the things that matter. The strategy, executing it properly, adhering to it, mitigating risk, setting the proper position size, and then simply forgetting about it are all part of process. The trade and your reward or profit will come as a byproduct of having executed the process correctly. 10th reason why traders lose money trading is meddling in trades after they have entered any position. One of the biggest mistakes traders make is messing around with their trades after they enter them. After you enter a trade, just doing nothing is the most profitable course of action. Most traders, especially beginners, do the exact opposite. By meddling with most of their trades, they ruin them and lose money. If you want to make consistent profits in the market over the long run, you have to learn how to ignore the never-ending temptation to play with your trades once they're live. 11th reason why traders lose is by chasing a signal missed and entering late at a bad price. It happens all the time. You see a trade setup you like, you don't enter it for a variety of reasons, then you return to the charts and see price taking off in your favor, without you aboard. It is frustrating, but the last thing you want to do is get into the market after things have taken off without you. It is simply a matter of waiting for another opportunity and remembering that the market will be there tomorrow. So, don't be rushing to trade or to enter a trade you missed, because this is an emotional approach that will only cause you to lose money. Another reason traders lose money is by not predefining per trade risk allowance. How much risk is allowed per trade? Could you sleep soundly at night knowing you could potentially lose this amount? If you have not figured out this amount yet, then you'll need to make some adjustments. Most traders don't even sit down and work out how much they are comfortable with losing per trade. You need to stop trading live until you have worked it out. Conclusion. As you trade the markets, it's only natural that you will make mistakes, especially as you start out. What differentiates winners from losers is how well they can learn from their mistakes. Those traders who make serious money from the markets aren't the ones who never make any mistakes and trade perfectly, but the ones who avoid mistakes discussed in this lesson and learn from them. It's very easy to make the same trading mistakes over and over and over again, until all your trading money is gone. Your goal should be to prevent this from happening to you. That's it for now. Don't forget to like the video and hit the subscribe button.